Okay, so here we go. Our first video, we will be talking about high impact news. So pretty much, high impact news is days that some people say that you shouldn't trade, but in my opinion, they're the best days to trade because there's the most volume and you can get in and out really quick. You can just trade momentum and get super quick scalps on news days because the market just flies around. So, for example, this is how high impact news affects the market. So let me go to TopStepX right now. And let me go back to Wednesday. Yep, marked it out already. So, 8:30, right here. Unemployment claims came out, right? So, basically, the actual number of unemployment was 20,000 under the forecast. So pretty much what that means is it is good for currency. And if it is good for currency, it is bad for the market because banks do not want to hold an appreciating asset. Therefore, they invest into the markets. So, since it was under, it is good for currency. Therefore, it is bad for the markets. And you can see right here, right after 8:30, the next couple candles, it just dumped, right? It dumped, swept liquidity, tapped into a gap, and yeah, pretty much that's pretty much it. And then you can go to other high impact news days, or let me go back actually. So let's see, FOMC meeting in minutes. Let's see what, or there's not a number for that, so we will go to another red folder day. Okay, unemployment claims. So what day was this? December 24th. So again, it was under the forecast. So this is good for currency, which means bad for the market. So let's go back to December. We got a 30-minute. This is again December 24th. Okay. So right around here. So I'll see what time that was. It was 8:30 in the morning again. Okay. Let's mark that out real quick. So 8:30 came out right here. 30-minute candle. Little downside movement. Pretty much just a sweep liquidity for a continuation higher since we were in an uptrend. So you can mark out this. And let me go down to the 5 minutes, see what the 5 minute looked like that day. So pretty much unemployment came out 8:30 and price just dumped on the 5 minutes. So you could have took a trade off of this. You could have took a trade off of this order block as well. So in my opinion, news is the most important. And then liquidity is second. So pretty much on high impact news days, you are waiting for them to drop the numbers, and pretty much you're reacting off of that. It's really not that hard. Good for currency, bad for the market, bad for currency, good for the market. So say if unemployment came out and it was 10K over, say it was 234K, then most likely what would have happened was it would have just kept running up. It probably just would have been a huge spike up, and then market likes to retrace. So there probably would have been a huge spike up, and then you probably would have saw a little retracement, maybe into a fair value gap, and then you would have saw just a rally higher, just like how we saw here. So yeah, that's pretty much how news works. You can go and kind of like back test this, so to say. So let's see what's going on here. So USD prelim, GDP, quarter to quarter. So what does it say? Greater than forecast is good for currency. So this is December 23rd, and it came out at 8:30. So it was greater than forecast by a whole entire percentage. So let's go to December 23rd, and let's go to market open, or let's go to 8:30, rather. Look at my tool. And 8:30. I guess I could have zoomed in there a little bit. So, am I tripping? Did I just mark out the same shit twice? Oh, dude, I'm a fucking idiot. Huh! As I post more videos, I get better at this shit. Okay. So basically, what was it? prelim GDP quarter to quarter. So it pretty much just came out. It was good for currency, right? It was above the forecast, and you just saw a massive dump of the market. So, and at that point, you could have been targeting these points of liquidity right here, and then you could have been targeting this CME gap as well. So that's pretty much how news affects the market. There's not really much more to it. Just get on Forex Factory and see what news is happening for the day. And if it's greater than forecast, it's bad for the market. If it's less than forecast, it's good for the market. So that's pretty much it. I just want to see what's coming up tomorrow. So we got PMI, right? So the forecast is 48.3. So greater than forecast is good for currency. So if it comes out tomorrow, right, and it's 49.3, that would be good for currency. So at 10 a.m., if it's above, we're probably going to see a little move down. And by little, I mean probably big. Probably going to see a big move down because we have all of this resting liquidity. Just mark out these lows. All of this needs to be taken out in order for Goldman Sachs to cash out their fucking money. So, and then maybe even like these lows and then these lows. Like, I'm just pretty bearish for next week, honestly. Alright, that's pretty much wrapped up the news video. So, next video will be on liquidity. That's probably the second most important thing. We'll be expanding that in the next video. Peace.